Hold on.
Well, who's got the microphone? Kristen, you got the microphone?
Chris is sharing his sound. But welcome. Happy Thursday, everybody. Welcome to the Loan Officer Breakfast Club. Carl is your host.
I like the way you did that. I like the way you did that.
And this is a bus, and here's somebody under it.
Hey, so I got a question for you. How often is trash day where you live? So here where I live, Thursday, actually it's Mondays and Thursdays is trash day. Mondays and Thursday. My house up in High Point, North Carolina, Owen, it comes once a week. Like once a week.
Once a week.
Same.
That's all
We're
I
once
have.
a week.
Everybody else is once a week?
Mm-hmm.
You are kidding me.
We're 3 times a week.
Yeah, I guess I'm just that much more trashy. I don't even know how. I thought everywhere was. How about you, Owen? Is it once or twice?
Monday. That's it.
Monday. No kidding.
But Carl, I'm lowering my carbon footprint. Okay.
Yeah, this is not one of my shining moments. I'm starting to detect. So yeah. And next, I'm going to admit that I beat puppy dogs or something. So. I did not.
It's probably we just put out twice the amount of trash. I mean, it's gotta
Isn't
be,
that
right?
interesting? It's just Maria and I, but yeah, we somehow every Monday and every Thursday, isn't that interesting? It's all Maria's bourbon bottles. That's the problem, So
yeah. Hey, I didn't want to say it, but you brought it up.
The juicer extract.
All right, so welcome everybody.
Is it both trash and recycling?
Well, that's actually, I think it's 2 separate companies here. So here's how it really works, just FYI. And I literally have gone down there and investigated this myself. Here in my county, when you put stuff in the trash can and then you put stuff in the recycle bin, it goes in different trucks, right? When it gets to the dump, the whatever you want to call it, recycling center, dump, trash center, it literally gets poured on the same exact conveyor belt. It's the same thing. So at least in my county, it's strictly a feel good. It literally gets dumped on the exact same conveyor belt at the trash/recycling center, and then it goes through all this mechanical stuff, that does the separation stuff. So they do separate it, but literally at any one given time, one truck is putting on that conveyor belt the recycled, and another truck is right behind it putting on the non-recycled on the exact same conveyor belt. So isn't that interesting? Somebody told me that, and I went, no way. And so you can self dump, like I can fill up the back of my pickup truck and go to the same place, and we're in the same line as the trucks. And sure as the world, that's exactly what happened. So I thought, interesting stuff. So anyway,
Carl, I learned something about the dump one time.
Tell me.
If you take an old rug that's about 6 feet long and you
with a body with a body wrapped in it.
Well, no, you can leave the body out, but it just black garbage bags and duct tape, they won't take it.
Hey, I don't want to say anything, but we just had the last 90 seconds of conversation, and Frank's not here, so I don't know what's going on.
There goes. Well, Frank's actually on vacation this week, so
yeah.
So he's
Jimmy
Hoffa.
Jimmy Hoffa. So hey, welcome everybody to Breakfast Club. So hey, I got a question for you. So this is obviously I'm having a little fun here, but this is a real question. And there's no right or wrong answer to this, right? I just love to hear, and I'd like to hear, like in the chat, just as many opinions as you got. And again, no right or wrong answer. It's right for you. What's one thing you either want to add on, like a project, a system, an activity? What's one thing that you want to add on, say, by the end of the year? Or what's one thing you're currently doing and you just want to do more of it that's going to move the needle for you the most in Q1? Because we all know that the activities we do today is responsible for our loans. Like where we are now, probably like February-ish is kind of what we're February, March is what we're working on right now. So what's no right or wrong? What's one thing you either want to start doing or you're already doing it and you just want to do more of that's going to set you up. So put it in there. I'd love to see what some of the responses are here. So let's see. What are we seeing? Making calls. Okay, I like that. Social, like that.
Freedom
Stay
caller.
stay in front of my database. Yeah. Automated emails for my CRM. I want to speak more to realtor groups. I like that, Angela.
Mhm.
That's a good one. My AI agent calling past customers. Love
Nice.
that. Newsletter. Love the newsletters, by the way. So I really do.
Yeah.
I like the newsletters. Social media, Freedom Caller, Steve's email campaign, Thursday text, Google business page. Very interesting. Yeah, a lot of good stuff here. So I'm going to shamelessly swipe these and start teaching classes on these. So I like this. Marty, events, doing teach, tell, touch, sell. So I like that. What about you, Greg? What's going on, man? Where are we driving to today?
We are driving home from dropping the daughter off so I can
Good. And that's what real
work on
dads
this
do, buddy.
project.
That's what real dads do. Good for you,
I'm
buddy.
feeling like a real dad. I got a 3-year-old and a 2.5-month-old, so I'm a
Wow.
real dad right now.
Wow. Good for you, man.
But the project I want to really engage by the end of this year is take every listing agent I've ever worked with, which I've only been in the business for like almost 5 years, send them all, because I had recent success with this, a $10 Starbucks gift card so they can get a fancy coffee, and then put them now. Let me check and make sure they do 8+ buy sides a year first,
Yeah. Mhm.
always.
Yeah.
Send them all a $10 Starbucks gift card, and then put them on a 12-week campaign of wanting to set up that meeting, because I recently started sending out these $10 gift cards to agents I've invited to events and things like that, and it is an instant $10 guilt campaign where they
That's
feel
exactly what
they
it is.
owe me something. For $10, I've gotten more business. Now, as I learned from you, Carl, the magic is in the follow-up, but $10, it blew my mind what $10 can accomplish.
Yeah, guilt is an underutilized tool. There's no question about that. So shame is totally uncool. Guilt is a very underutilized tool. So I like that, man. That's a great idea. Hey, just as you're doing this, we're getting ready to turn this over to Mr. Owen Lee. The one thing I keep in mind is I always have what I call a project minimum, a project minimum. So anytime I'm getting ready to work on something, I think, all right, and I'll tell you what my number used to be, and I'll tell you what it is now. So my number used to be if I'm making this connection, this coffee meeting, this software, this system, this newsletter, this answering service, like whatever, that it has to, my old number was it had to produce me at least $30,000 for the year. So I can't work on any project or any person or any relationship or any activity or any software unless I've got really good assurance this thing's going to make me at least $30,000. And I know it's going to make me $30,000 because I see Brad do it and I see Francis do it. I see Tammy do it. I see Mr. Gillespie do it. I see Miss Moody do it. And I go, okay, I know it works, right? So it satisfies that. I've recently moved mine up probably about 2 years ago, I think. I rose mine up to 60,000 because I got a benchmark that I'm looking for. And I thought, $30,000 at a time isn't going to get me there. Because one thing I found, it's just as easy to recruit a real estate agent that'll send me 2 deals a month as it is one that'll send me 1 deal every 3 months. Same amount of effort, same amount of follow up, same amount of coffee. And so if I'm gonna do something, I want it to move the needle yet even more. And the problem that causes, Owen, is I have to take a very honest assessment. What am I working on? And yeah, but this is cool. Yeah, this is fun. That's okay. I can do that stuff after hours on the weekends, just like the crossword puzzle. But when I'm in my business and I'm working, is this activity lead me in the direction of either whatever whatever somebody's number is, but it's not 5,000 because that won't get you there. And so as you're looking at some of these, and all these responses I saw look dead on to that. But anyway, just wanted to do that. So
If you're getting value from this already, go ahead and tap that like button. It helps more loan officers find content that actually makes a difference. And hey, if staying ahead of the market and learning what's really working in our industry matters to you, hit that subscribe button and ring that bell so you don't miss another episode. We read every comment, so drop your thoughts down below. We'd love to hear from you and know what's working or what you'd like us to cover next. Thanks for tuning in, and we'll catch you here next time.
Mr. Owen Lee, how you been, my man? You had a
Sir.
you had a big event here that you're just coming off of.
Oh, we did. I was gonna sleep in this morning, but I thought about my Breakfast Club friends. We just wrapped yesterday about 225 people in Detroit for our annual sales conference. It was fantastic. Shared a lot of good ideas. Shared a lot of good knowledge. We had this crazy guest speaker who flew in to chat with us about a few things, Mr. Chris Johnstone. So that was fun.
And he picked at the bar tab, I heard. So that's just the kind of guy he is. That's when you speak at your business, that's the kind of level of respect that you can expect. So just everybody know that if you're ever looking for a good speaker, it's well worth it. So.
But I'll just say this, Carl. The best thing about it was, we have our company 501c3 charity on at the awards banquet, which doubles as our biggest fundraiser. We raised $130,000 in one night for the type 1 diabetes camp in.
I heard it was 100. I heard it was 140. Because I heard that there's another $10,000 check on the way.
There you go.
So I heard it's 140, just FYI.
Excellent.
Yeah, I hear it. So for those that don't know, Owen's son is a big part of this, that he kind of is the liaison and just an outstanding young man doing wonderful things.
Yeah, my son, my youngest child has type 1 diabetes. He was diagnosed when he was 11. Went through some really rough times. But we found this amazing camp called Camp Sweeney. If anybody on this call is touched by type 1, I would Google it. It's an amazing place. It's the largest camp for kids with type 1 in the world. They host about 770 kids per summer, and it costs $4,500 to go for a 3-week session. And about 1/3 of the kids come from homes where their folks can just write the check, and about 2/3 of the kids could never get there without a scholarship.
Wow.
So we're gonna send about 30 kids to that camp this summer for free. So
very good.
It was amazing. It was absolutely amazing.
Thanks for what you do. So, hey, and I'm looking forward to hearing more about your top producer panels. Looking for maybe we can grab some good content for the podcast, but yeah. So
we got some good stuff coming, my friend.
Yeah, we do. Coming. Oh, hey, Jeff Morgan. Yeah. That is so. Just real quick, Jeff Morgan. Great question. Do me a favor, Jen, if you could hook Jeff up with Meg and get him on my calendar. Jeff, if you're okay with it, I'll answer that question. You and me will do a podcast together. That's a fantastic question. It'll be an excellent episode. We'll record it. And then if you're okay with it, we'll publish it so everybody else can hear that too. So, all right. Mr. Owen Lee. So what's going on in the news?
Yes, sir. Oh, we got first, before we do that, I would just want to revisit one thing from last week, if that's all right. And then we'll go forward. Jen, you want to throw up those slides?
Sure do.
Because we talk about this often. So if you remember, last week I was on Wednesday. It was Fed Day, and we talked about lock or float and Jay Powell's latest propensity to downplay rate cuts, right? So, here, and that's exactly what happened, right? That's exactly what happened. So here we have our friend Jay Powell, whose heart was clearly 2 sizes too small last Wednesday, and may have stolen our December rate cut. And let's just so for those of you that happen, the market, as we talked about, right? And this is kind of funny, but it's kind of important also. We talked about how rate cuts, Federal Reserve rate cuts, are priced into the market in advance, right? so that when the rate cut actually comes, it's already priced in. Last Wednesday was the best example of that ever because we had a 98% chance of a 25 basis point rate cut, what we got. The market was betting on a 90% chance that we would get a December rate cut. And Jay Powell, they released the statement. He walked up to the microphone at the 2 o'clock press conference after, and he said, hey, the December rate cut is not in the bag. It's data dependent. And that rate cut had already been priced in. So you saw a day where we got a 25 basis point rate cut from the Federal Reserve and interest rates went up 40 basis points in price because the market didn't like what it heard about the December rate cut that had already been priced in. So, Jen, can you go to the next slide?
Yep.
This is just I want everybody to calm down for a quick second, though, because this is our 1 year, right? So even though we had a bad day last Wednesday, courtesy of our friend, the Grinch Powell, this is where the market is over the last 12 months. And just remember, a rising market means declining interest rates. So even though that little snippet at the end came down, we're still, as you can see from a 12-month view, riding in a good spot. So I don't want anybody to despair or anything like that, because we're still in a good spot. But this is exactly what we talked about on those lock or float days. Let's look at what happened just in that one day. Jen, if you can go to the next slide. So look at this. This is a 1 week chart. And this is the day. As you can see, the market opens actually up a little bit. And then at about 2 o'clock on that day, when he starts speaking, you can see the precipitous drop just as this man is speaking into the microphone. So it's just something that we always want to keep our eye on. One of my jobs on this call is to bring some information to you that you can infuse into your everyday life. And this is a great example of, hey, when it's already priced in, get your people on the phone to lock, explain that to them, okay? Because the chances of a Fed rate cut in December on that day dropped from 90% to 55% because of what he said, and this is what we got, right? So just always keep that in mind. Now, to that end, I was just kind of looking this morning, just as we were getting on this call, and we had job cuts, and so there's government's still shut down, so we're not getting our jobs data from the Bureau of Labor Statistics. We're not getting all of our inflation data. So the market's overreacting a little bit to private surveys, because in a vacuum of data, the little pieces of data that do show up take on increased importance. So there's a Challenger and Gray report that came out this month that job cuts in October hit their highest level in 22 years. That's not a complete survey of the whole economy, but the market is definitely reacting to that this morning. So you got the 10-year opening up in our favor. And I haven't seen the first mortgage bond number, but my guess is that's going to open up in our favor as well. Because what does this do? If this is true, the market's pricing that December cut back in, and looks like greater probability that we're going to get it. So just always pay attention to that stuff, because it helps you position yourself as an expert to your clients. Also, more importantly, almost, I would communicate this type of information to your referral sources. Make yourself look like an expert to the referral source. So just wanted to kind of review that, because I'm sure this will come into play again in December, mid-December, when we get that last Fed meeting of the year. And then remember, there's not one till very late in January. So let's go to the next slide, Jen. Just something I want to highlight. So a friend of this show, I know, and a friend of Carl's, Barry Habib, doing some very important work for the FHFA. He's taking a look at loan level price adjustments. This is something that just went live a couple of days ago. And there was great hope in the industry, I think, that they would look at the loan level price adjustments that relate to credit scores, right? We had Dr. Sandra Thompson, the last FHFA director, who kind of put in that system where, honestly, you get penalized a little bit if you have really good credit, and you get a little bit of a benefit if you have more moderate credit. I think most of the industry would like to see that go away, because a lot of those moderate credit score people can buy a home just fine going through the FHA program. So, you know, if it helps people get on the home ownership ladder, I'm for it. But I don't think it matters so much whether they get a conventional loan or an FHA loan or something like that. So you look at this, but I don't think they want to rejigger the LLPAs too drastically before they're trying to do the IPO. But they are taking a look at a couple of different things. The second home and investment property, drastic hits that went in actually before Biden became president. If you remember, we got those about the last 6 months of Trump 1.0, courtesy of Mark Calabria, who was actually trying to raise money for a different reason. He was trying to raise money for the GSEs to have more capital so that they could exit conservatorship. And then they stayed with Dr. Thompson because they helped supplement those so-called mission loans. But now I think we're going to finally get rid of those, it looks like, as well as the hits to cash out refi. And I think the reason why that cash out refi, I'm very hopeful about that one, is we should encourage cash out refinances. We absolutely should encourage them, because there's this thing, we talked about it before, called the lock-in effect. And I'm sure you guys see it every single day in your business. That means my interest rate starts with a 2 or a 3, and I'm so enamored by that first number, that 2 or that 3, that I'm never giving up that loan. Well, I'm at a 2, but I got $68,000 of credit cards at 29.99%, right? And that's absolutely killing me. So the idea is refinance that person, get their cash out, pay off the 29.99%. Yes, they no longer have something that begins with a 2 or a 3, probably going to begin with a 6, right? Or maybe a low 6 or maybe a high 5, depending upon what you want to pay and roll in and all that, right? But the borrower's in a better position. And if we can remove that LLPA hit on a cash out or lessen it, that price goes lower, more people qualify. But even, it's not even the qualification, more people perceive that to be a better deal, and it puts them in a better financial position. We've talked about this before. Maybe on some future Thursday we should relive the stats, but you've got record tappable equity in this country right now. It's trillions of dollars. I think there's $36 trillion of equity, by far an all-time high. About 28 trillion of that is what they call tappable home equity, because it could be refinanced, right? You can't go 100% LTV. But that's about tappable. And we've also got record consumer debt in the trillions. And guess what doesn't have an interest rate that begins with 5 or 6? That trillions of consumer debt. So I think that removing or lessening the hit for cash out refinances would be a huge benefit. And it looks like they're going to do so. Definitely moving the ship in the right direction. But remember, driving the GSEs, driving Fannie Mae, and driving Freddie Mac is you're driving a freighter, right? You're not driving a ski boat. So it's an 18-wheeler, not a Ferrari, it's not a Tesla, it's not, you know, something cool. it barrels down the road at 70 miles an hour, almost blowing everything else off the road. So definitely moving in the right direction. I don't think we're going to get the wholesale change that most of the industry wants. I think they'll take a look at that after the IPO is done. But definitely moving in the right direction. So that's what we've got this morning.
Wait, so I just want to make sure I got the right take-home message. Tesla's fall in the cool category. Was that?
Tesla owners are permanently cool.
Okay. I was sitting here like everything else was like, yeah. Wait, what? No. So very interesting data. So what do you, and I know this is projecting out a little bit. We find that I know refis have been running nationwide about 40-ish%. Is that is the new data, is that hanging in there, Owen? Are we seeing that in our industry?
So far, the data truly lags about 2 weeks behind.
Okay.
But I don't think, as you see that year-long chart, let's not get caught up into 1 day's movement or 2 days of movement. We are in a better place, and the market would have to fall many, many days in a row in order for us to really, we'd have to lose probably 150 basis points in pricing. And I don't really see that happening. Not anytime soon. So yeah, that number's holding. It fluctuates a little bit. But I think that 40% is going to be pretty gosh darn close, probably through late February, when we start to get the first sniffs of the
purchase
the
market,
spring market.
Yeah. I think I think it's, look, and nobody's going to say it hadn't been hard the last handful of years, right? It has. It's been somewhat brutal. Now, for those of us that actually did things and do the prospecting that we do, hey, we've done well. But it wasn't as easy to do well the last 3 years as it was the previous 3 for sure. But the good news is those of us that hung in there, which is all of you on here, pat yourself on the back. You survived a very difficult, probably one of the most difficult markets that I've been through in the last 25 years. And the good news is all those higher rates that we wrote here in the last 3-4 years, it's going to give us some really, really, really good opportunities here, like now and in Q1. So I think
I'll tell you a couple of things, Carl. They call that the survivor dividend.
Mm-hmm.
And we ought to do something about that before the end of the year, I think, because what you need to talk to your clients about is we have got literally the best story to tell that we've had in 4 years.
Yeah.
The best story to tell. We've got record inventory for sale since the highest level since pre-pandemic, since 2019. We've got the lowest interest rates we've had in close to 4 years. We've got record home equity, record consumer debt. This table is set. Yes, it's not 2020 and it's not 2021, right?
Hey, just as a reminder, if you're enjoying Loan Officer Breakfast Club here on YouTube, you can catch our live shows. The live shows are really cool because there's oftentimes downloads and giveaways. It's really, really fun. To subscribe, you simply go to loanofficerbreakfastclub.com. That's loanofficerbreakfastclub.com. Subscribe and join us on our live shows. They're 8:30 a.m. to 9 a.m. Eastern, Monday through Friday. Hope to see you there.
For those of you under the age of 50, you might catch a market like that again one more time in your career, depending on how long. I mean, I'm not trying to be funny, but you need a pandemic. You need a plane to fly in a building. You need some catastrophic macroeconomic event for that to happen. And we should all hope and pray that that doesn't happen, because overall those things aren't good, right? A 5 interest rate, a 6 interest rate, we can make plenty of money at 5 and 6 if we're working hard. And we've got the best story to tell. As a matter of fact, I'm gonna do a Thursday on that. We got the best story to tell in 4 to 5 years. Right now.
Yeah, very good. Good stuff, Owen. So again, if you put, we've automated the process. If you just put the word slides into the chat button, you automatically if you put the right email address in, of course, you should automatically get a reply or an email which automatically emails you the slides. So, by the way, who set that up, Kristen or Jen or Chris?
Rick.
That is one. So, Owen, we got this new thing now that we can make it so when anybody types in a certain word into the chat button, that it automatically triggers a response of an email or an email with the attachment of the slides, and like it happens in real time. Isn't that pretty slick?
Yeah, I just typed in bourbon. I'm waiting for not just coffee that's in this mug, Carl.
Yeah, I hear it. Yeah, that looks like a pretty small mug if you ask me. So anyway,
that's true.
Good stuff. True. Hey, Owen, thanks so much. I appreciate. Thanks for everybody being here. Remember, today's Thursday. Yeah. Today's Thursday. Today is pre-approved and looking day. So you've gone through all the headache and the expense, and you paid the $487 for the credit pull. Make sure that you actually cash a check on it. So follow up on your pre-approved and lookings, and if you want to know what to say to them, teach, tell, touch, sell. Like you can mix it up. Teach them something. Tell them a story of another family that took action. Let them get to know you a little bit, which is the touch. And then on the fourth one, just come out of the closet. Make sure that you confirm that you're the lender that they're going to be used going forward. So teach, tell, touch, sell.
Hey, Carl,
your pre-approved looking. So yes, sir.
Carl, I hate to interrupt you, but I was just watching the comments, and we were joking about that. John Fortner just typed in Tesla, so I'm sure there'll be one pulling into his driveway any minute. Yeah,
Kristen Simpson. You spelled Chippendales wrong, Kristen. You spelled it. It's.
I mean, I've got all the eye candy I need this morning.
Yeah. Absolutely.
Hey,
all right,
what
that's
else
it.
Today is. I just learned this. What else today is? It's Miss Justine David's birthday.
Oh, happy
Can
birthday!
we say happy birthday to Miss Justine?
Justine.
She just took off on us. Oh, darn
it! You know what else? You know what else today is? Today, Starbucks releases their holiday drink menu.
Right. Well, that'll help open up.
How that wasn't on my calendar.
Yeah.
I don't know.
Well, it is now. May I recommend the chestnut praline latte if you find yourself out and about.
Hey, one last thing here, just real quick. So, and this kind of a somewhat serious note. Owen, I was talking with this guy, and he was telling me, I've always saved you and I have talked about this a long time. Always save 25%, right? That's always been my number. Mm-hmm. And I thought, well, as long as I save the 25%, the 75%, obviously legal, ethical, and moral, I can spend the money on anything I want to. Mm-hmm. And this person said, yeah, but Carl, you still want to track something. You want to track where your money's going, like for a month or two, like literally every dollar, just to give you awareness.
Yeah.
I thought, all right, well, that makes it, because you don't want to be stupid about it, but I thought I'm saving my 25%. I don't know, if I'm paying for a music thing, $10 a month that I don't use it, whatever. Like, who really I'm saving my 25%. Mm-hmm. So I shared this with a friend of mine, and we're both doing this right now. Like, we're on this thing here. So get this, he calls me up and he said, Carl, I saved $1,800 a month by doing that on one thing. So, and this guy does well, right? So his one thing was every day after school, his 4 kids, I think it was 4 kids, maybe it's 5, 4 or 5 kids were going to a coffee shop, getting a energy drink at this coffee shop, and he figured up the math of it. It was costing him a little over, because there's 4 kids, a little over $400 a week. It was like $1,600, $1,700, $1,800 a month that they were spending at this Starbucks, so to speak, every single month.
Yeah.
Impressive. Isn't that impressive?
Those companies are sneaky smart. I always used to say, hey, I'll go to this one or that one because I drink black coffee, and black coffee was only $2 for the longest time. And in about 6 months, the black coffee went from $2 to $5 because it's just not worth serving it to you if they don't charge $5. I mean, I'm the only, like, if you ever want to have fun, go into a Starbucks and just offer a black coffee, and they look at you like,
what's wrong with you?
what?
Yeah. Up yours.
Yeah. Yeah, exactly. Because I don't, have a splash of cinnamon and all this stuff. But yeah, it's ridiculous. It's like $9-10 a drink.
All right. Yeah. I thought that was interesting. So yeah, even if you're doing well, even if you're saving your money, track it for 1 month, and it'll bring some things a little bit of awareness. So anyway, I didn't tell Maria about it though, because I want to be the one tracking it, not the lovely Mrs. White. Just in case. I go, no, we're going to leave this one alone, right? So anyway, hey, I got to dash.
Carl's always playing chess. Always playing chess.
Always play. I got a 9 o'clock. I'm 4 minutes late for. Thanks everybody. We appreciate you guys. Chris, why don't you close us out? Tell us what we're doing tomorrow, and I'm gonna bow out real quick.
Yes, absolutely. And if I may, in the background, just while we have everybody here. So tomorrow we're talking about custom GPTs. So we're doing a database marketing campaign. We've taken 21 mortgage applications by offering an AI GPT to the past customer database. And I'm going to take you through it tomorrow, show you what it is, and give you a prompt so that you can build your own. And then we've got Build It with Chris at noon tomorrow. So tomorrow's going to be a ton of fun. And now that Owen and Carl are gone, I just would like to make a statement to our community here. What incredible leadership, what incredible leaders we have in this group. Like Owen raising money at a charity, and that's the thing that he comes and talks about on the national conference. And Owen, if you're listening to this, thank you for having me at the event. It was amazing. And then I don't know if that just got glazed over, but Carl just made a $10,000 donation to a charity, just live on Breakfast Club, and nobody made a deal about it. That's a really big deal. I don't know. And that's going to help people's lives. That's the type of leadership we have here on Breakfast Club. And each and every single one of you has made it through the market. You're incredible people because you're here. And it's just an honor to be here with you. And I'm looking forward to seeing everybody tomorrow morning. And Gen Z and Kristen Simpson, I'm so honored and thankful to be here with you guys running the show. So I know it's not as good as music, but that's a nice little way for us to end Breakfast Club. I'm going to try with some music on the outro, but let's get out there. Let's have a great day. And we'll see everybody tomorrow. Have a great day, everybody.
Thanks, guys. Thanks, Chris.
Yes.
A wonderful day, everybody.